This week, we're talking red meat production, cattle on feed numbers, and a mostly stronger week for cattle prices. Welcome to the weekly Livestock Market Update. I'm your host, Meghan Grebner, with us as always to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
All right, we're going to dig into a pretty interesting cattle on feed report that came out earlier this afternoon. We'll also talk a little livestock slaughter and take a look at those red meat production numbers. But first, let's recap what happened this week in the markets.
Yeah, Meghan, this week on the cattle side, we saw cash-fed cattle about $2.60 higher. Now, that was on some extremely light volume, that price estimate. So we'll see. Feeder cattle markets this week were anywhere from $4 to $7 higher. On the futures side, the August live cattle futures contract was up 20 cents, while the August feeder cattle contract lost ground this week, down $3.75. A little surprising given we saw July corn futures that were down 13.25 cents this week. Choice box beef was also higher this week, up $3.10. So I think it's important here to just remind us, choice box beef is still about $14.50 below where it was a year ago, yet cash fed cattle $12.50 above a year ago. On the hog side, cash barrels and gilts were down 25 cents this week. The July lean hog futures contract was down $2. We also lost on the pork cutout value. It was down $2 as well this week. Weaker bellies, weaker loins really drove that pork cutout value.
I want to talk a little bit, repeat where cash prices are now compared to where they were a year ago for cattle.
Yeah, so I'm showing an average of $1.95. I think I heard some $2 out there trying to happen as well this week. And we were at $1.83 roughly last year this time. So it is much higher prices, record levels. We may not be done. I keep saying that, but we'll wait and see what happens.
We'll definitely get into where prices could potentially head as we talk about those cattle on feed numbers coming up. Let's talk slaughter numbers for the week as we take a look at a pretty active week as well.
Yeah, so USDA tells us for the week ending June 22nd, a run of 620,000 head of cattle this week. That is 5,000 head more than we did last week, but it's down 29,000 head from the same period a year ago. On the hog side, a run of 2.419 million head this week, according to USDA. That's up 39,000 head from last week and up 51,000 head from last year.
And then how are we looking when we take a look at those numbers year over year?
Yeah, so it puts us now down 4.4% in terms of cattle slaughter, yet up 0.9% when we look at hog slaughter.
All right. Livestock slaughter numbers came out this week. I think it's interesting when we take a look at the slaughter totals in comparison to what is happening in terms of production, specifically on the beef side of things.
Yeah, for sure. If you look at total cattle production for May of 2024, down 3.2% is what we got out of the livestock slaughter report. Yet when you look at beef production for May of 2024, it was up 0.9% at 2.3 billion pounds relative to a year ago. A lot of that had to do with what was 36-pound higher cattle dressed weights in the May report. So I think that drove a lot of what we've seen. I'll say it's interesting. We're almost at the same levels of beef and pork production and have been for a few months here. 2.3 billion pounds of pork being produced in May as well, up 0.3% from last year. Here's where we're talking about hog weights that are only up a pound and hog slaughter that ran pretty close to year-ago levels.
It's so I guess maybe it's surprising to me on the hog side of things. One, how much a pound can make in terms of make a difference. But when we look at to a 36-pound increased slaughter weight for cattle, and I don't think that that's going to go away anytime soon as we take a look just to kind of preview what we have seen in the cattle on feed numbers this afternoon.
Yeah, that's right. Well, that 36 pounds is just up 4.4% from where we were a year ago, Megan. So it's not surprising when we look at those percentage changes. Cattle slaughter down 3.2, cattle dress weights up 4.4. You add all that together, and we're up 0.9% in terms of beef production. It's one way to get more beef out there by increasing slaughter weights. And I think you're right about these weights likely don't go away anytime soon. Feedlots trying to stay full. Corn back in that 450 range. I think all those things keep us feeding cattle to heavier weights.
I don't want to get out of this livestock slaughter report without talking about beef cow slaughter. As you take a look at those numbers, talk to me about what you're pulling out of where that beef cow slaughter number is relative to where it was a year ago.
Yeah, so we slaughtered 241,000 head in May of 2024. That's down 20% from where we were in May of 2023. Maybe a little longer term here. So year to date, we're down 13%. I think we got to get ourselves down in that 15 to 20% range for an annual average before I get too carried away about what we're doing on the cow side. However, if you look at some of the federal region beef cow slaughter numbers, just to get a little sense of what's been going on, and this is data through the week of June 8th here. Region 6, Arkansas, Louisiana, New Mexico, Oklahoma, and Texas, down 16.5% year to date in Region 6. I think we've seen better weather, at least in Oklahoma, that I think has maybe made us reduce beef cow slaughter. And when you look at Region 7, Iowa, Kansas, Missouri, Nebraska, down 16.8%. Just a couple of regions where I think weather has been much better and maybe leading to what's been a reduction in beef cow slaughter.
I think it's also going to benefit us to talk and to keep track whether I'm doing it through conversations with different states to see the split of steers and heifers in weekly sale barn auction data, because at this point, we're not going to have a July cattle inventory report. And it's going to be important to look at those different data sets to see if we can start to see a slowdown in heifers slaughtered or heifers sold, and next month's percentage of heifers as well.
Yeah, that's right. So to me, cattle on feed report, and when we get percentage of heifers on feed, that will begin to illuminate a little bit further whether we're seeing any kind of growth. I don't want to discount what we're doing in terms of beef cow slaughter right now, but I think we got further to go before I'm going to suggest we got real growth trying to happen. And of course, as you point out, we won't get any real data from USDA until the end of January of 2025.
That's a long way to speculate, and a lot of uncertainty that can build in a market.
And for sure, if we start getting percentage of heifers on feed going down, we'll get a lot of speculation, I think, trying to happen about what's happening to beef cow inventory. I will keep saying, don't forget what happened to us in 2014 and 2015. We built back a lot quicker than anybody thought. And when we looked at the percentage of heifers on feed, it dropped quickly from quarter to quarter. So I don't want folks caught by me saying I don't think we're going to potentially see a lot of growth in beef cow inventory too quickly. That could change really fast. We just haven't seen it to this point yet.
Don't miss an opportunity to manage and mitigate risk.
You read my mind.
I think I've been doing this long enough. I probably could read a lot more than I need to. All right. So let's talk cattle on feed numbers out this afternoon. Just to level set for a second, in April, placements were down what percent?
So we were down. Sorry, you caught me not thinking about this for a minute.
6%. I'm pretty sure. We're down.
So you're correct. Yeah, 94% of a year ago. Yep.
Yep. So we were down 6% in April of 2024. And we thought, wow. Today's report, placements in May, 104.3% of year ago levels. What does this tell us?
Well, at face value, that's not a great positive piece of news out of the report today, is what I'll say. And for multiple reasons. Number one, when you look at the pre-report estimates, the midpoint was 98.3 of a year ago. Upper end was 102.4. So we were 2 percentage points basically outside the upper end. Not many were expecting that kind of growth in placement. So it's likely going to be seen as negative. I'll say on feed June 1 as well will not be helpful, as it came in at 99.9, also a 0.5 percentage point outside the upper end of the pre-report estimates. So I expect a little bit of negative when we talk about markets next week, but we'll wait and see.
When we think about this number long term, if we're still placing more animals, what does this do to supplies later in the year and well into 2025?
So I think there's a multi answer to that question, Megan. So I'll say, if you believe all the other data in terms of cow inventory, et cetera, it probably does mean placing, we'll have fewer to place as we go later through the year. But if you start to wonder whether we've missed on counts on some of the other categories like cow inventory, perhaps that doesn't suggest we have fewer placements, and may suggest we have more than we thought as we go later in 2024.
Does this, and we've already said it once, but does this kind of highlight that need for risk management and to really take a critical look at your balance sheets, your operation, your costs of production, all of the things that matter when you look at any potential uncertainty or continued volatility or added volatility to the market?
Yeah, so I'll say, don't get lulled to sleep by record prices. We need to be thinking about that risk management side. Don't get lulled to sleep by those of us that might be out there saying we don't think maybe we're done with record high prices either. You need to look at your operation and take advantage of some risk management. You know, we're at some phenomenal prices today. I think that gives us some opportunities that I don't want to see folks miss. So maybe you're willing to risk it on a portion of your inventory, i.e. wait for markets, but maybe for a portion it's worth doing some risk management on. Only time will tell. But I will say, at these kind of record prices, just don't be surprised for markets to try to move down quickly if there's bad news in the marketplace.
Scott, that'll do it for us this week as we take a look and kind of preview and look ahead to next week. A pretty big week of reports: cold storage, quarterly hogs and pigs, June acreage, which I think is going to be interesting, but I'm assuming probably is only going to tell part of that story on what's going on for corn, soybean acres in the US. What are you watching for?
Yeah, so I think on hogs and pigs, this is a really interesting quarter, just to see whether we've done any real additional reduction in breeding inventory, as well what's happening on the productivity side. You know, that's what's really been driving this. Has anything changed when we see this next report? I think that'll be important. To June acreage, for me, this has a lot of conversation about corn. You know, USDA told us 90 million acres of corn was going to be planted back in the March prospective plantings report. If we now all of a sudden talk about we've got 91, or I don't know, maybe 91.5 million acres in the ground, if I'm a livestock producer, I'm excited about that. Yes, we'll have to wait and see what happens on the yield front, but I think there's some opportunities for continued cheaper feed as we look ahead, and this report will start to kind of at least set in motion what the acreage looks like. Now, if USDA comes back and tells us we planted 88 or 89 million acres of corn, I know what happens to corn markets as well. So those are some things. These are a couple of big reports for us next week.
Definitely look forward to checking in with you next Friday.
Sounds good, Megan.
Scott, it's always great to see you.
Likewise.
To have a weekly livestock market update delivered to your mailbox every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And John Perkins is back next week with his market minute for what's going on with corn, soybeans, and wheat twice a day. Make sure to check it out. Have a great weekend. I'm Meghan Grebner for Brownfield.